Right, hello and welcome to Camel Finance. I'm your boy Camel, and you can see by the number of tabs, there's quite a lot to go through, but I think a large number of these, will be quite rapid fire. So let's try to do this as efficiently as possible. A couple of things before we get into today's video. I showed the adoption curve and crossing from innovators to early adopters yesterday, and a lot of people were quite triggered by this. So I just wanted to show you why we are still indeed very early. I want to talk very briefly about managing expectations because, again, we're getting a bunch of repeat comments, so I want to deal with that. And then the focus of today, of course, is we're going to be going over the ETF launch that we saw yesterday for Bitcoin, and we got CPI data, so I want to discuss that. A couple of charts, but given that it's Friday, we'll wait until tomorrow to do the weekend's deep dive TA as always. So starting off with this, look, I showed this yesterday, and I said that with the launch of the ETF, we've probably crossed from innovators to early adopters. And you can always tell when people in the comments start throwing shade and name calling and being toxic. Look, if you disagree with this, number one, it's not my chart. I just presented it. But number two, I don't just present charts that I see on Twitter without checking them, okay? So if you have a disagreement, it's absolutely fine. I would love to hear your opinion. If I say something wrong, I would love for you to correct me. But don't just get all wound up and emotional. If you can't even look at a chart as simple as this and remain stoic, right? If your emotions cause you to throw shade and call names and start arguments with other users, with other members and stuff, you know, you're not going to make it. Just pick a different profession, okay? This is just a chart and it's correct. And I'm going to show you why using the maths, okay? So first of all, the biggest gripe people had with this, so they were saying there's no way that we can be here. We must be more like here because there's all these ETFs, countries have adopted it, blah, 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 blah. But look, this speaks to new users. This speaks to the number of people on this planet that use Bitcoin, okay? And the maths is very simple. There are 480 million wallets for Bitcoin. Now, your average user has somewhere between 3 and 10 addresses on average per user. But let's just be conservative and say they only use 2 addresses, okay? Now, if you've got Bitcoin, if you use Bitcoin, you know, right? You know the number is above 2. There's no way everyone is sitting here with 1 address and they've DCA'd and they've built a position. You've got 1 wallet, okay? There's no way, and you know it as well as I do. But let's just say to be conservative, we'll use 2. That means there's 240 million Bitcoin wallets. Let's use 8 billion for the population, and we get roughly 2% adoption. 2% of Earth is using Bitcoin, okay? Now, the real world number is much more like 160 million Bitcoin users. So it's one of those things, isn't it? It's easy to sound smart when you talk to somebody that's an idiot and doesn't know anything, right? It's easy when you go to a no-coiner and go, yeah, well, we're already here. We've already crossed the chasm. Well, Bitcoin's already integrated because we've got ETFs and blah, blah, blah. Yeah, you sound smart to somebody that doesn't understand how wallets work, right? But this is how wallets work. So it's not up for debate, okay? It's not, your opinion doesn't matter. This is what matters. We are, in fact, here, okay? That's where we are. It's not up for debate. And, you know, again, if I said something wrong, if there's a problem with my maths, or if you've got a legit reason, then please reach out to me and just be nice, okay? Be nice, and I'll be happy to hear it, but don't go name calling, don't go picking fights with people in the comment section. You know, get a life, okay? Just get a life. The next thing I wanted to talk about is managing expectations. I'm seeing a lot of people write things like this, not just in my comment section, but on Twitter as well. Miners are taking a beating, or Bitcoin up, but miners down. What's going on? You need to manage your expectations, and all I mean by this is, why do you buy the miners in the first place, right? Because the miners can do a 10x on the way up, whereas if you buy something like Apple, it's probably, you'll be lucky if you get 2x, right? But after all the miners have moved up multiple hundreds of percents from their lows, they then have some kind of 20 or 30% pullback. And I'm seeing a whole heap of people saying things like miners are taking a beating or Bitcoin up and miners are down. Look, Bitcoin and miners, number one, they don't move in tandem, okay? They don't have a one correlation. Sometimes when the stock market is down and Bitcoin's up, we can see miners pull back. Also, if Bitcoin has been doing mostly this, which it has, right, trading sideways, and the miners prior to this have been straight up, doesn't it only seem reasonable that we're going to get large corrections on the way down, big flags, and then we're going to have to draw trend lines and add to positions? So just manage your expectations, right? There's no way you get a 10x stock that isn't going to have multiple 20, 30, 40% pullbacks on the way up. Those pullbacks function to flush out people, with, and I say this with all due respect, like you, okay? People like you that are worried that miners are taking a beating, okay? They're not taking a beating. It probably just means you're oversized, over-leveraged, or you were ill-prepared, because there's no way you're getting a 10x return without seeing multiple sharp, violent pullbacks. And this pertains to Bitcoin as well, okay? At some point, and it could be as early as today or as late as in a few months' time, but at some point, Bitcoin is going to have a nasty, violent correction. So if you're not prepared for that ahead of time, then That's how you get wrecked, okay? So please, 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 just manage your expectations. There's no free lunches here. If you want 10x up, then you have to be prepared to give a chunk back on the way down. So moving on to more important issues, okay? Bitcoin Spot ETF launched yesterday, and there was the good, the bad, and the ugly that I'm going to go through, hopefully a lot quicker than the first few tabs. So number one, we did over 4 billion in volume yesterday. So that is fantastic. We also saw Coinbase do over 7 billion in OTC, right? Over the counter. Also fantastic. We saw 400 to 500 million in withdrawals, followed by another 210 million. So again, we're over $500 million of net outflows directly from the Coinbase exchange. Again, very, very positive. Demand is there, okay? Now the price might not reflect it at the moment, but demand is certainly there. There's more positivity here because we've still got, in orange, this is the liquid supply. This is people like me, and probably like you, that aren't selling right now, okay? I've got my stack of Bitcoin. I'm not selling it. I don't care if the ETF is launched. My plan was never to sell into the ETF, right? My plan is to wait for much higher numbers and then offload when we get technical breakdown. So this is what this chart really shows, that the majority of the supply, 70-ish%, is illiquid, okay? It's not up for moving. So that leaves all of these billions for the ETFs to fight over this remaining 30%. And I would suspect as they start to acquire their Bitcoin, as people are buying the ETFs, then this illiquid supply is going to creep up further and further. Again, very, very positive so far. And the positivity continues because we saw the first 500 million roughly of volume that came into the ETFs moved the market cap by $48 billion. So it means that we really do have this bull market multiplier effect that the Bank of America put up around 118 times, right? But what we saw is 96 times based on the spot ETF volume, right? We saw 500 million come in and the market cap go up 96 times that by 48 billion. So a $1 inflow into Bitcoin causes a $96 market cap increase. And all of this is very, very positive. And I know you're probably sat there thinking, well, why didn't the price move up? Well, we're going to get there. We're going to get there. Overall, this is very positive, right? You can see the demand was there. Huge amounts of volume was settled on day one. And we really do have a bull market multiplier effect, which is largely attributed to the fact that most of the supply is indeed illiquid, right? So all of that is really positive. Happy days. So then the question remains, why didn't the price do much, right? We got a little spike to about 49K on some exchanges, and then we kind of ended up back in the same range that we've been in for the past month or so. So what we saw is that large broker dealers were refusing to sell their clients Bitcoin ETF products right now, even though the SEC have approved it, right? They've decided to be gatekeepers. The British Hodl said that he heard from a manager with $1 billion under management that spoke to his broker dealer with over $1 trillion, and they said that they could not sell Bitcoin ETF products as the compliance department is refusing to allow traders to execute at the moment. So we've already got jiggery pokery at play, right? This spread to all the platforms apart from Fidelity and Charles Schwab by all accounts. And these providers were not allowing institutional traders to have access to the ETF products. So we did see massive inflows, but then they kind of closed the doors, right? They turned off the buy button. So it looked a lot like this, right? You call them up to say, I want to buy this ETF. And they said, look, currently we're not allowing those products to be purchased as it doesn't fit with our investment philosophy. Okay, but you let me buy GBTC in the past, Grayscale Bitcoin Trust. Yes, and I believe you can only sell that now. We have got them allowing GBTC to be let out. We've got sell side pressure from GBTC, and yet they switched off the buy button for the institutional traders to buy the spot Bitcoin ETF. So what on earth is happening here? Well, I believe what's happening here is they are allowing the big boys, some of the big boys, to get in first. So I guess it was never going to be easy, right? But you give it a couple of weeks, let these big boys in, and then everyone else can buy, likely a lot higher up than we are today. And that's pretty much what I think is going on, right? I think they're letting in some big boys, whether it's a sovereign wealth fund, whether it is some institutions or banks. They're going to let these people in, let them execute their trades right now, fill their position, and then as Bitcoin's price starts to move up, as they hoover up all that OTC supply, we'll see the price move up, and then they will turn the buy buttons on for everyone else. So again, I guess it was never going to be easy, but objectively speaking, right, we've done well. We haven't had a sell the news event yet. I'm not saying that couldn't unfold over the coming days and weeks, but if it does, I do believe that it will just be to let these big boys in before then we run it back turbo. So all of this, in summary, reminds me a little bit of the halvings, right? You get a ton of hype, people fade it, and 6 months later, the tsunami comes and melts people's faces off. Probably going to be the same deal with the ETF. That, of course, is to be determined, but right now, I remain wholly positive, and at least we didn't get a dump of like 20 or 30% yesterday, right? So positives are there. Speaking of positives for Bitcoin, this is still not invalidated. I saw a lot of people commenting saying, yeah, well, this blow off top thesis is invalidated. It's not. Look, here's the first line. Here is the second line. the Elliott wave count is still not invalidated. So unless we start to break down, right, unless we start to do this sideways or break down and continue down towards the lows, then this count and this idea and the confluence between the Elliott wave count and my cycle hypothesis, all of this is not yet invalidated. We need to at least lose those cycle lows back from a month ago first. Then we can entertain this being scratched off. For now, though, this is still very much in play. So it's going to get a little bit more uncomfortable in the short to medium term because we've got the highest volatility in 18 months. And this is probably only going to get worse, okay? There's going to be games played, there's going to be shakeouts. And the reason they do that is because they need to generate the liquidity to fill the institutional orders via the ETF, right? So expect more volatility, expect more chop, expect a whole heap of games to be played. But at the same time, don't get distracted that overall, the trend should be up and to the right. We've got more positives for Bitcoin because you can see the likes of the Bank of England, they're running scared. It's not just the Bank of England, the ECB is also running scared. They're getting community noted for bad mouth in Bitcoin, right? Speaking of community notes, we got Liz Warren also getting community noted for bad mouth in Bitcoin. And again, the banks are running scared for good reason. This is the Bank Term Funding Program. This is the QE disguised as a loan program. And of course, this is printing money to prop the banks up. The banks need propping up only because the Fed, the central banks, told them all to buy bonds, promised them it wouldn't raise rates, then raised rates very aggressively, forcing these banks to sit on unrealized losses. And then they offer them the solution by printing money and say, well, we'll loan it to you, okay? We'll loan it to you since you're in such a bad financial state. So overall, right, you can see why the banks are running scared, but it doesn't change the long-term trajectory. It doesn't change Bitcoin, right? Bitcoin will continue to do Bitcoin things. Yes, there's going to be games and volatility in the short term, but overall, I think, like I said, give it a couple of weeks, let the dust settle, let the big boys in, let them switch the buy buttons back on for the ETFs, and then we should continue to see demand increase. Where we start to get concerned is if we start to lose those cycle lows, if we start to have technical breakdowns on the chart, or if it turns out that demand has dried up in day one, right? If we don't see any volume come in over the next few days and weeks and months, then we can start to be concerned. But don't get it twisted. We saw massive volume yesterday. Like I said, over 7 billion OTC, 4.6-ish billion in volume for the ETFs. That's massive. That is massive. So don't get distracted. Don't get shaken out unless the chart breaks down. So far, so good. So that's Bitcoin dealt with. We also had CPI come out yesterday. So we're going to do CPI. A lot of people are asking me about this. And ultimately, right, the headline came in slightly hotter than expected. The core came in more or less in line and actually below on a year-over-year basis. The labour market not in any serious jeopardy. So in summary, right, headline was a little bit hot, but likely for the final time. Core is more important to the Fed. That came in line / lower than the last month's readout, which is more biased to the bullish side. So the closes to this week will be really important, but for now, the focus is going to be on the rate probabilities. So we'll get to those in just a minute. Everyone on Twitter, including Peter Schiff, was coming out and saying, look, that's it. CPI's bottomed. Now we're going to see a turn up. Now we're going to see a tick up. Now we're going to see the resumption of an upward trajectory for inflation. But I said, look, disinflation is over. Not in my opinion. Next month, we likely see that sharp drop start to develop. Deflation shortly thereafter, just like China showed us last month. Okay, remember, we are moving from inflation to deflation. And again, this has not yet been invalidated. I did say in that video that I believe we were swinging this way. Okay, now we can have a short-term wobble, but make no mistake about it. We are positioned to move into strong deflation. You can see that, as I keep showing over and over again, because the M2 rate of change, this is what's currently pricing in the chart right here. And this is yet to manifest in the CPI print because it lags by 18 to 19 months on average. So we will start to see that leg down. In fact, as I've also been showing over and over again, we've had the leg down, we've had the sideways, and at the hard right edge, we are starting that second leg down. Again, perfectly within the expectation, perfectly as to be expected based on the M2 rate of change. We should now, at the next month's CPI print, start to price the 2 handle, right? Meaning the readout starts with a 2 next month. So as it stands, this readout we've priced a month ago, somewhere in this neighborhood. This readout we've priced a month ago, somewhere in this neighborhood, right? But you can see at the next readout, we're going to be pricing in this neighborhood. We're going to be on that 2 handle. Inflation is going to drop in line with the expectations. Now, if it doesn't, then we have invalidation, right? I'll go back to the drawing board, but I am very, very confident that we do indeed see this aggressive move towards deflation start to show up as of next month, starting with that 2 handle for CPI. And so long as that shows up, then I continue to accept this as the primary hypothesis. Now, as I just said a minute ago, the focus should be on the rate probabilities. 95% chance we're paused at January. That makes perfect sense. But take a look at March, okay? This was bounced initially up to a 40% probability that we might remain paused, but it's since fallen sub 30. This continues to reprice in favor of seeing cuts in March, despite the perceived hot print. Well, it was an objectively hot print for headline, but core is more important, as I said, which is more bullish bias. Core is what drives the Fed, and core is coming down, okay? The Fed probably knows what I've been saying is correct about this next leg down coming. That is why the CME is pricing that we're going to see cuts in March. All we need to do is continue to monitor inflation, continue to expect and hope to see it move down, and we will be able to continue to accept this as the primary hypothesis. I still continue to expect to see this reprice higher and this reprice to the downside, telling us that it becomes more and more likely we see cuts in March as we move forward through this year. Credit spreads, as you can see, look absolutely nothing like financially stressed conditions at this moment in time, and thus, as it stands, we should be able to continue to move higher. We should be able to continue to complete this blow off top moment as we approach those rate cuts, as we start to see the inflation drop like a stone. Overall, things don't look so bad. So the last wobble before a two handle, I largely suspect so. That seems to be what the rates know, right? The rates seem to know this. And most interestingly, if I go to the 10-year bond yield, okay, and zoom in a bit, I know this chart's a bit messy. I appreciate that. But look, breakout retest, no strong push off yet, okay? In fact, yesterday, quite a large red candle down. I would expect when the PPI data comes in today, assuming that is not hot, we should see this close back down inside of here, and then we could look to resume down, because the bond market probably knows that this is correct. We are indeed going to start to reprice this to the upside, and the cuts are indeed coming as early as March. So an interesting time. I suspect we also see this dollar roll over today once we confirm that lower PPI print, or at least not scorching hot PPI. And again, nothing really changes apart from the fact that we potentially have knocked everything back by 1 month. Now, like I said, invalidation comes if we get to the next month's readout and it's creeping up again, then I'll have to hold my hands up and say, okay, something's wrong. I don't have a good read. Maybe we need to reassess. But if we're on a two handle for next month, then I don't think this is anything to be concerned about. I also think particularly if we monitor this trueflation for trend. Remember, that's all this is. I just use this for trend. This is not a forecasting tool. I understand all the CPI data, including this, is completely inaccurate, right? I understand all of that. But all I'm looking for here is the trend to do this. So as we continue to monitor this, if we continue to see the hard right edge trend down, then happy days, right? Long and strong. And we should be set up for that blow off top moment. So like I said, I'm not going to spend too much time in the charts because it's probably already been quite long already. But you can see, look, Bitcoin is still making higher highs and higher lows, right? It still has not invalidated this. I've been saying the same thing over and over again. Nothing has actually changed. No sign of a sell the news event. Do something like this, then there will be. But for now, it's still making higher highs and higher lows. It'd be interesting to see how much volume comes in today. And more importantly, it'll be really interesting to see whether we get a weekend spot buying frenzy. Monday is a public holiday in the US. So again, we have the potential here to see Bitcoin run up significantly over the next 3 or 4 sessions. And if, of course, we can see that, then you better believe that there's going to be a frenzy of buying on the Tuesday next week. So the setup is there, right? The setup is there to continue to run to 50 plus K over the next month or so before we drop into that next cycle low. For now, long and strong continue to push until the chart tells me that we've got something wrong. And lastly, I wanted to point out something for the stock market. Look, yesterday it looked quite bearish, but what did we really have objectively? We had up, right? Then we had down, and then we finished quite strong for CPI. So pretty standard up, down, up, or sometimes we get the down, up, down, don't we? But ultimately, CPI always functions to be a choppy and messy situation. It's not the sort of thing I like to trade, but objectively speaking, we held the support. We're above that cycle low, looking to confirm by breaking above. In fact, I think we did actually wick above. Yeah, we did wick above, okay? So if we can continue this uptrend, if we can close a daily candle above this red horizontal, then this count is confirmed. And that tells us, right, that despite the inflation narrative, despite the slightly hotter headline print, we should be expecting further upside. Look, the NASDAQ closed green, okay? Hard to be bearish in this situation. The Dow Jones also, look at that, big red candle followed by an up wick, holding support, continuing to move higher. So these charts are quite bullish. The VIX, look, okay, being compressed. Let's move this out of the way. not speaking to a volatility event. And of course, it's Friday, meaning we could see VIX crush Friday, meaning they come out and short this thing into oblivion. That's typically what happens on a Friday. So overall, right, things don't look so bad. One day at a time, expect volatility, but don't get shaken out. Don't over leverage, don't oversize, and zoom out, right? Don't be looking at your charts. Let me get an S&P 500 chart. Yeah, don't be looking at this when you don't be zooming right in and paying attention to all these candles like movements in the moment. Okay, it's a daily chart, which means you should be zoomed all the way out, get some context, understand that these big red candles are not that big when you're zoomed out, right? And there's plenty of space to the upside. So other than that, I hope you're doing well in life. I hope you enjoyed this video. Message for the members, like I said, we've been pushing through CPI because we knew there'd be chop, and based on the S&P 500, right, it's the right decision. So you can see that here, the wider indexes, they looked pretty bad at times yesterday, but we're probably going to close green today. And if we do, then pushing through CPI was the right thing to do. For everyone else, make sure you come back tomorrow. I'll be doing a full detailed deep dive and TA ready to attack the following week. Other than that, I hope you're all doing well in life. I wish you all the best. Have a fantastic weekend. And until next time, take care from me. All the best. Cheers. Bye.